Will the Bitcoin bulls return? Is this market about to break down? Altcoins seeing some precariously bearish signals. We're jumping right on into it today. Get this liked, retweeted, subscribed. We got some key charts we're looking at. Let's get into it. Let's go. It feels like the Bitcoin bulls are never going to return, but it's always right there on the edge. In fact, we can see it very clearly on the chart, looking like the candles here on the daily are actually trying to really uphold breaking out of this descending resistance trend line right here. And it's just on the edge. Will we get the price action to push up in this range and actually cut through, find some support and launch, or are we in for a lot of sideways action? We have some key charts we're going to go over today, not only on Bitcoin, but a number of altcoins and some other fundamental shifts of what's going on. We also have a guest coming on from Milk Road. Kyle Reidhead will be popping on here in a little while to dive into what they're seeing on the markets and where we're going from here. Now, I hope you're all feeling good. These markets might be feeling frustrating, but I do feel like the wild volatility that we've been seeing is setting up for a bit of this final time opportunity to really take advantage of the markets. Welcome to the BitLab Academy family. If this is your first time, I can guarantee you it's not going to be your last time. Welcome to the show. Let's dive right on into it today because we've got a lot to cover. And when we dive into the data here on CoinMarketCap, we see that the price action, the total market cap is sitting at the same levels right here, 2.67 trillion. Been oscillating between that 2.4 now last couple days into the last week. We've been in the 2.7, 2.8 trillion. We got up near 3 trillion again, pull back down. We're just essentially sitting here with not a lot of room both to the upside or downside. In fact, we see a couple coins seeing some big moves. Core, we see Curve Dow making nice gains, 37% in the last week. Radium up 50%. Holy malarkey, I didn't even notice that. Then we also have got, EOS just kind of trucking along, up 4%, down 4%. Just the zigzag. I mean, you can see this in the chart right over here on the 7-day chart you see on the right side of each one of these bars. On the flip side of that, we are seeing some downward price action on Onyx, Movement, Pi, Jasmy. Remember, Jasmy had that pretty nice move up. It's getting a little bit of a retrace right now. We got Celestia, Tia. It's been a bit flat for the week, so I had a little bit of a rise and basically right back to where it was. In fact, actually dropping a bit, as you can see right here on the chart. But when we get into it and we talk about what's going on, that's not what I wanted to show. This right here is what's kind of scaring some people, and there's some confusion about whether or not it's even true. Is China's local governments selling or having sold 15,000 Bitcoin worth $1.25 billion via offshore private entities? Well, it's been being reported, but we also see right here from Wu Blockchain, completely false information. This is why we've got to be very careful, especially we've seen with different news stories and different things and posts that go viral that then everybody jumps on the bandwagon of, causing these, very mass buys or mass liquidation sales, just riding that trend of excitement, hope, fear, greed. Well, this says right here, Reuters reports that a Shenzhen company helped Chinese local government sell $400 million worth of cryptocurrency since 2018, and that China's local government held an estimated 15,000 Bitcoins worth $1.4 billion at the end of last year. What else does this say? Well, the question is going to be, what does this actually look like on chain? We're going to have to dive into this a bit deeper, which we're not going to do in this stream. The point being is here, you see one article posting one thing and you see other people contending with it entirely. So we got to pay attention to this and realize you've got to build your own strategy. You've got to look at the charts here and say, is this where you want to enter when you zoom out on this and look at the macro and realize this is in an incredible uptrend and we've only just been having a bit of a pullback into a previous range high. Things are actually looking relatively quite bullish here, especially when you consider that we've had this beautiful bullish divergence that is formed here that we are still holding up right at the cusp of that next move to the upside. The question is going to be, what is going on with all of this chop back and forth, hope, fear, excitement, tariffs, more tariffs, tariffs, delaying tariffs. No, more tariffs. That's what's going on right now. So everybody's saying, well, my technical analysis says this. Your technical analysis doesn't fucking matter right now. I'm sorry to say. You can set levels of areas of interest to have buy areas that if you're willing to hold, or sell areas if you're wanting to, hit these shorter term targets. But the macro picture right now is very bullish into the future for Bitcoin. Altcoins are still looking a little bit precarious about what is going to unfold there. We're going to break that down right now. I'm still very bullish on it because I'm willing to hold through the frustrating time period that we may endure if we don't get a massive switch on what's happening with the money flow, with capital flowing back into Bitcoin, with the risk narrative, also with what we're seeing with the global money supply. Is that about to explode higher, only lighting these things on fire? Shout out, Uncle Tommy says, good morning, Kelly. Granny's Garden, good to see you as well. Bill Brower, Dave Middleton, Alexander G, Chip how you doing? We got the Green Day Prophets. We got the fam in the jam. So big love to each and every one of you. Let's get back over to some of these things that we wanted to cover, because there's more things that we need to pay attention to, like the behavior of different types of holders, conviction holders, short-term sellers. We got to pay attention to different types of holders, the types of wallet addresses of people that have conviction, people that are, they're very, very fickle. They're short-term holder buyers. Are they first-time buyers? What is going on? And what we're seeing right now is that we may be seeing signals that sometimes have aligned with a local top area. And this doesn't mean that this is the top of the Bitcoin bull cycle, but even right now with this small little retrace up, is this a dead cat bounce? Will this reverse back down? Or is there just confused signals at contention everywhere? We've got to kind of pull this apart. So what does the data say? Well, when we dive into this, let's first look to the US M2 supply is at all-time highs. China's M2 supply is at all-time highs. Japan's M2 supply is at all-time highs. European Union M2 supply is at all-time highs. Global money supply is going up, and eventually this liquidity will get captured into Bitcoin. To some extent, this is what we're seeing. Massive upticks in the amount of liquidity going into world markets. So we got to make sure we're prepared for when this switch does happen, because we're also seeing gold run away. We outlined a bunch of charts yesterday showing that the gold, very similar to the M2 money supply ticking up, the gold price has also been a leading indicator of, this flight to risk off, flight to gold, that leads then to also a lot of positive price action within the Bitcoin market to follow. The question is when, not if, but when. So shout out to right here to Ted Pillows. Make sure you follow them. Got great content there. I chat with them in DMs periodically. Always puts out great content. And then what else do we see? We see, even if in this near term, maybe this is a relief rally, we do get a little bit of sell-off. Even within that, if that were the case, the important thing right now is with Bitcoin's price action, we are seeing something known as a potential Wyckoff accumulation rather than distribution. Accumulation would indicate that this is likely coming down and having buyers define where these lows are, getting the final spring here before you move to the upside. When we look at it in action on the price action chart, this is what we're seeing on TradingView. This is very similar to looking like that Wyckoff accumulation. So even with the pullback, that would not be invalidated. A pullback into this zone would not be, let me make that a little bit brighter. A pullback down into the zone, even down into the, $80,000. First off, you'd only be testing this previous range of support, this support trend line. But furthermore, we don't ever want to see price action just go up and to the right. We want to see price action make a move up like this, have a bit of a pullback, a retrace, have the bulls come in and defend, and then make that next move to the upside. In this case right here, it makes sense, but somehow it's hard to put it into practice when our money's on the line. And what we're seeing right here is the push up. Are we going to get a little bit of a pullback before we get that move there? Or is this part of that right here where we're waiting for a little bit more before we get a larger pullback? As it stands right now, this is the daily chart. If we go to the 2-hour chart, as it stands right now, this looks fairly bearish. This looks fairly bearish in the near term, not in the long term. This is looking like potentially a setup for a move down to test into this range, which would make sense because this is where you have all of these lows right in here, some of these highs right in here. So having this pullback like this wouldn't be the end of the world. In fact, it would just be part of normal trend structure. And in this very short-term trend, what we want to see, if we want to see this continue to the upside, is for the bulls to come in and defend, realistically at minimum above this level here. So you have consecutive higher lows. So that's what we're looking at the very near term. But let's get back over to what we're looking at. We're getting a mixed bag of short-term holders, long-term holders, first-time buyers, accumulation buyers of various, basically their supply score, their RSI supply score. Are they buying? Are they selling? But, going on right here, which we can see on this heat map. First-time buyers don't tend to buy in very smart areas. They buy hype. So first-time buyers is green, 100%. That means that they're having a lot of buying pressure. And then you get down here to basically profit traders, kind of a little bit of a mixed bag. But then right here, the conviction buyers, those that hold long-term, they're looking for better prices. Or they're looking for a different structure right now because this is red. So that does give some indication potentially about some of the composition of what people are thinking about when they're looking at the markets right now. Now, again, every single person you talk to has a different risk tolerance, has a different risk appetite, has a different amount of exposure to this market, whether it's 100% of everything that they have in markets and investments at all. Some people have only 1%. Some people only have $100 out of 10,000 or $1 million. Everybody's on a different time horizon and risk appetite here in this market. And so due to that, while I look at this and I zoom out and I go, this is bullish as a mofo. There are people that are going, I put this in hoping I can make rent next week and I was going to double this. And then it moves a little bit and they get scared and they sell. There's so many different types of players in this market, which is why it makes it so interesting once you really get involved in these markets. As much as you know technical analysis, as much as you're looking at potentially on-chain data or the RSI or what's going on with the moving averages and where the price is in relationship, nothing is perfect in these markets, especially when you have outside impacts on what's going on with the sentiment within the market. Like what's happening with tariffs shouldn't really affect Bitcoin in a negative light. If you consider Bitcoin is the flight to safety, Bitcoin is that asset of the future. And in fact, anytime there's economic or market stresses, everybody should be floating to Bitcoin. But it's not there yet. The market sentiment and awareness around this industry is not there. Institutions, big money, ultra high net worth individuals are only now really starting to get involved with Bitcoin. And due to that, and the somewhat younger nature of Bitcoin as it sits within the broader investment in global finance ecosystem, it's still trading a bit risk on, risk off like the Mag 7. So we've got to make sure that if we are stacking, especially right now, you're either very nimble with very tight stops or you're actually stacking, not trading, and looking for longer term time horizons. That's what we are paying attention to right now. So let's get back over here because we got the mixed bag of what's going on. We got the money flow. It's going up everywhere. Oh my God, the M2 global supply just ticking to the upside. We got the Wyckoff accumulation setting up for that potential move continuation up. Again, potential. We have to see what happens in this zone. There's no telling what's going to happen right now we just had a 245% now tariff on China. What if something breaks beyond that? Beyond just them money printing to get out of this economic pressure that they're feeling. It also feels like the U.S. is trying to align the world against China. What if something else breaks on a larger geopolitical stage? We've got to be a little bit nimble here. I'm still overwhelmingly bullish on Bitcoin, but there's a lot of money games going on right now. Yeah. So let's get into it. We got a couple more things we got to look at. Where is it at? We are looking at the dominance. Guys, we're so bullish. We want our altcoins to do well. Meanwhile, look at this. This is a dominance. This is on the daily chart, just ticking, almost to new range highs in this this has been an uptrend for about 3 years. AKA Bitcoin has been performing better, more broadly than the majority of all alts out there. This 64% is 64% of the entire crypto ecosystem, of the entire digital asset, cryptocurrency, blockchain. Add every market cap together, every coin out there, Ethereum, Avalanche, Cardano, and the 32 million coins that there are now. And Bitcoin makes up over 64% of that. But in fact, it's more than that. Because when you remove stable coins like USDT and USDC, then you actually see that the Bitcoin dominance is actually up at about 69%. Is this going to push up and basically test this previous range high? Is this going to push beyond it? Everything's on the table right now. Everything's on the table about what can happen, especially with the institutional preference in terms of where they're going to attribute or park their potentially park their liquidity, taking on Bitcoin treasuries. And we're seeing that trend start to expand and the amount of institutional stacking that's been going on. Bitcoin Bitcoin very well may really take the lead for this cycle, and only certain altcoins will pop. It's yet to be seen. I still think we'll get a bit of a move broadly, not for every altcoin, but I still think we're going to get a pretty solid move for altcoins. And what I'm paying attention to there is this right here. Another chart from Benjamin Cowan. Make sure you're following him if you're not. Always great content there. Super smart guy into crypto verse. And make sure you're spelling that correctly because he's another big account. There's a lot of fake accounts of all of us out here that do content. He is great. Really nice guy as well. But looking at this is the alts. Essentially, total 3 divided by Bitcoin. So the value of altcoin markets as weighted against Bitcoin. This is suggesting, based on this speculative sort of trend line down here, support, that we may have a bit more of a way to go for altcoins before we get a bounce, if this is meant to be come down and met. Again, this is all speculation right now. We don't know. But as bullish as I am, I look at this with utter frustration, with the immediate realization that it's also an incredible opportunity if that does happen. We've got to be nimble this cycle because things are different this cycle in terms of the way, the shape, the interactivity, the what is going on a global economic, global administration, from the Trump to Korea to what we're seeing in the European Union to China, the trade wars. We finally have a landscape in the US where they're supportive of blockchain, crypto, altcoins, all of those things. We are in basically just now at a new starting point for these markets moving forward. So this is exciting to see Bitcoin. It's exciting to see Bitcoin be so bullish. Yes, bullish on this massive, beautiful bull trend here with the beautiful pullback on price action right into a previous range high in a falling wedge here on the edge of breaking out. It feels like there's so much bullishness. In fact, RSI looks like it's trying to break out a bit here too. This is on the 3-day. Let me go to the daily. I do think it's actually broken out. See, on the daily, the RSI has broken out and is finding a bit of support. It feels like we're on the edge of glory, like that song. And it also feels like it could just absolutely do another final washout and melt people's faces off and come down into this box that we've had on here for some time. Kelly, I want you to give me the answer. Is Bitcoin going to go up? Are there altcoins going to pump? Are we going to get an alt season? Right now, we are contending with an enormous amount of conflicting signals in the data. I still think that we're going to have an incredible bull run in 2025 and likely push on and continue into 2026. I think Bitcoin's going to do fantastic. I think it's going to be more frustrating, longer periods of consolidation like we saw last year with 7 months of $17,000 to $20,000 ranges of price action going sideways before then it exploded 100% to the upside up to that $109,000 target. Altcoins have kind of suffered because we haven't had still a lot of real clarity, but also what's the true utility behind them? How many of these altcoins that we're holding are just projecting what their hope and intention is, and how many actually have the true use case transactions that prove it, and also the volume, the underlying assets, if it's RWA, are there things tied to it? Is it just a Ponzi? There's a lot of questions going on in the market right now, and there's a lot of capital and liquidity interest in Bitcoin that's sort of taken the cake from the altcoins. And meme coins didn't do any favors to altcoins either, because everybody said, oof, shiny new thing, smoking chicken fish. I'm going to go make some money on that. And Trump's balls, and I want to also get some. Guys, we got to focus here. Go and do that in the casino side. Do that. Sure, play. But don't do that with your portfolio. Do that with the little lottery section, like you carve out such a small amount that it doesn't matter what happens. I see far too many people wreck themselves in these markets because they're hoping for the quick thing. The quick thing just means you quickly get poor. That's what's going to happen to 99% of you if you're focused on trying to catch the next random meme coin. Now, I'm not hating on meme coins. I'm hating on the way in which people are exposing themselves to unnecessary risk. I think meme coins have a great function in the market, but don't go and full port even more than 10% of your portfolio. I don't care if your portfolio is $1,000. Don't put more than $100 into meme coins. In fact, I'd say keep it under 50. You want to make sure you're setting yourself up for success. There are no easy tickets. There are no easy means to doing that, other than the easiest thing you can do in crypto is to spend time educating yourself. Tune into places like here on BitLab Academy, Discover Crypto, check into the Milk Road newsletter, check into what's going on at Frankie Candle's Blockchain Basement. The list goes on. Get a variety of information, educate yourself, and then dive in, because we got more things to look at right now. We got a guest coming on here in a couple minutes as well, I do believe. But looking at this altcoin dominance, the Bitcoin dominance does give me pause here. But what I will say is we do have a bit of this flat level. Now, this is relatively high, flat level of RSI, while the price action tops have gone quite a bit higher. So there is a nominal level of bearish divergence here. But bearish divergence is going to be ignored by completely shifting landscape and still a bit of lack of clarity. And that mantra, the OM meltdown a few days ago, doesn't help the altcoins cause. It still puts some capital sort of risk warnings on big money players. They're like, well, let's just kind of, what's tried and true? Bitcoin, right? So we got that. And then check it out. So we've had such a bad quarter one, right? Well, quarter one was frustrating. We got it. Lesser known about quarter one, we saw a lot of all-time highs. What all-time highs did we see? Stable coins up to 218 billion. Tokenized real-world assets up to 19 billion. Bitcoin futures trading volume up to over 800 billion. Bitcoin futures open interest, 16 billion. Bitcoin held by public companies, 688,000 Bitcoin. Ethereum and Layer 2 transactions, 1.2 billion plus. That's not dollars. That's the number of transactions. We are seeing fundamental growth in the crypto, blockchain, digital asset ecosystem. In fact, we also have the digital asset chamber meetup, the summit, the blockchain summit, all these things happening at the White House with the current administration, with the new SEC focus, with Paul Atkins, who's a big proponent, also working with the White House so they can come up and make sure that they're applying real regulation that has that's intended use case and not just to put the foot on the throat of the ecosystem. The time might be frustrating now, but that's just because we are expecting it just to be only up. We got to get the damn foundation built. So let's build this foundation together, everybody. And then we see other things like Constellation DAG, which I talk about here regularly. Constellation DAG, now check it out. They're also on Base. Why build on Base with Constellation? Base is fast, low cost, Ethereum L2. But if you're you can read through this. I just want to get into some TA. We have our guests should be popping on here in the next few minutes as well. But Constellation DAG, they've been in those talks with the White House, with the Digital Asset Chamber. I mean, so much that's going on there. And they already have existing contracts with the Department of Defense, U.S. Air Force, U.S. Transcom. I mean, the list is ridiculous. So I think they stand. And when you want to talk about opportunities, look at these market caps. Look at these market caps. I'm going to come over here, going to go like this. Go ahead, refresh the page. So 1.6, almost 1.7 trillion, 192 billion, 144 billion, 122 billion, 82 billion, 66 billion. And, I hold some of these coins, right? I hold some of these coins. Yeah, they're all very massive market caps, even coming down here to, let's see, something like Monero, 4 billion. You got Aptos, 2.8 billion. Ondo, love Ondo, 2.6 billion. And then you come over here and you look at DAG. People don't even realize this. They have all these contracts that have only recently kind of rolled out to the awareness of the public, the retail side. They have these ongoing long-term contracts with the Department of Defense already integrated in some ways with the government, which is a good thing when you think about the government about to start to pick different blockchains to deploy and integrate all these different systems onto. And look at their market cap, 110 million. This is such a hidden gem. My God, I'm so bullish on DAG. So yeah, and they're not even listed on Coinbase or anything yet. I know they have they did pass all their diligence with them, so it'd be interesting to see when they get listed. But you can get it on Mexi, Gate.io, and I'm not sponsored by Constellation DAG. There's nothing. I'm trying to highlight for you guys one of those gems on the chart that's going to give you some a higher likelihood, higher probability of upside when it does go. Let's get down here and actually look at that. And then we're going to look at some other coins until our guest arrives here. Where is not Doug? Where's DAG? I'll just type it in. I get tired of looking for shit. Okay, there we go. So zooming out here, I mean, this is kind of, I mean, the pump last cycle, beautiful pump. Click 14 times. There we go. 76. 76x. Golly, we're not going to probably get that again, but massive. And this has come all the way down about a 95%. This was that whole bear market, but this is just kind of sitting here in kind of a macro W formation with the falling channel here, with the RSI bottoming out, and with a market cap of only $110 million, a market cap of 110 million. So when we're looking at this and we're looking at the dollar, going into this sort of risk, potentially the setup for risk on. This is why everything's so confusing right now, because dollars dropping. We're seeing the bond markets doing wild things. We're seeing this inversion and contention with various signals that should mean X, but we're seeing clashing responses of what we're seeing in the market. But even though we're not seeing the explosion higher, the point is not to catch things as the market has already exploded, is to see the leading indicators, understanding that the dollar is having some pressure on it, understanding that the global liquidity is ticking up ridiculously. And with that, we could talk to somebody that might have a little bit more their own thoughts on what's going on in this market. And that is my good friend here, Mr. Kyle Reidhead. How you doing, my friend?
Hey man, how are you? I'm great, thanks.
I'm doing well. I'm admittedly getting a little bit frustrated with just the ping ponging of good data, bad data. It's just every day feels like a new Venn diagram. It's like, yeah, but then this, and it's like, bro, just fucking DCA, chill out. Let's continue these what's feeling like emotional support, PTSD live streams every day to make people calm down a little. But what's your take on what's going on in the market right now?
Look, I mean, there's a lot happening in the market right now. Obviously, the global trade war between the US and China is kind of the be all end all at the moment, right? It's going to be tough for, I think, any asset other than gold at the moment to do well, or any risk asset, let's call it, to do well while there's still uncertainty. Markets hate uncertainty. And so until this is decided, which can kind of be decided in two ways, it either, Trump decides to end it, or the Fed decides to step in and do something about it. If neither of those happen, then we remain in uncertain times. And I think we don't really get a risk on move until one of those two things happen. I lean more towards probably it gets resolved. I don't think this is something that can remain for forever, at least not at the current amounts. I think this morning I woke up and Trump had raised the tariffs on China to 250% or something ridiculous like that. Like, obviously the world trade can't work in that world. Maybe he has a plan, maybe he doesn't. I know everyone has different political views here, but ultimately, I think that's going to have to get figured out before we really go risk on, and or the Fed has to come in. But I don't think it's bad enough yet. But the Fed will have to come in at some point and either lower rates, print some money, et cetera. But we haven't really had that scenario yet where things have just completely broken. We thought we were going to get it last week with the bond market. Didn't quite happen. So I mean, we're just kind of in that unknown land right now until we figure out what's going to happen. Markets hate uncertainty, and we've never been more uncertain before, I think.
You know what's something that I'm kind of trying to contend with in my own mind about the data that everybody is deciphering, looking at previous recessions, what's going on now, when are we going back into a risk environment, is I feel like there's also been a fracture of how people manage money. And what I mean by that is there's an entirely like you have parents, right? I have parents. Our parents had a completely different relationship with credit, with debt, right? Then like our generation's like, I can't afford it. Shit. I'll get the credit card. Oh yeah, I'll get the Best Buy card. So everybody has all the coolest shit ever, and then they don't realize how much more they're paying for it over time. You know, I know I had a friend that was he bought like two TVs on a Best Buy card, and he paid for them over like 5 or 6 years. And I did the math for him. I was like, dude, you paid like 3.5 times, almost 4 times what that TV cost because you paid rather than just
That's like a
hold
house,
off,
right?
save some money and buy. And so now we're seeing all these inflationary, recessionary signals, but then we have jobs, but then debt's going through the roof. But then I don't feel like the same metrics we can use to contend on where we're at economically and the health of what's going on is, I don't want to say not relevant. I think there's so many different nuances now that it's really hard to pick it apart.
Yeah, I mean, things change. Things continue to change, right? Obviously, COVID changed a lot. Probably this trade war is going to change a lot. So there's a lot that's happening. I think the way that I dumb it down, the way that I sort of understand markets, that has held true for decades and decades, is by looking at the business cycle. If you understand the ISM, then which is the indicator for the business cycle, and the business cycle, by the way, is just basically like economic. Economic growth or expansion and then economic contraction. If you follow the ISM and you see how that has moved, basically every risk asset in the world moves alongside that. Some move faster, you know, when the ISM first starts to pick up, Bitcoin moves and that's when it outperforms. As the ISM goes above 50 and really picks up, meaning there's a lot of activity, economic activity, that's when altcoins outperform. So you kind of go more risk on in those environments. And we've seen this business cycle play out for decades, long before crypto. The stock market goes by the business cycle. Everything kind of goes by the business cycle. And I think that's where your eyes need to be right now. There's a lot of noise with tariffs and with change and like everything is changing in the world. And I think what you can do to just shut out the noise is just go look at the ISM and let that guide you. I don't know if I can share a screen, but I have like a chart up that can kind of
Yeah. I
show
will
this.
say, I'm going to let you know before you do it, share your screen. But when you do, when you click share, you're going to see a little toggle on the bottom right that says share audio. Deselect that. Otherwise, it's going to turn you into a robot.
Okay.
You'll see it on the very bottom, like when you select, when it's giving you the window options.
Yeah. Let's try that. Do I sound like a robot?
Oh, you are perfect. So let me
Okay.
get you four. So here we go. And by the way, before you show yours, let me show you mine. That's actually from Tech
This
Dev.
ISM.
Just the global business cycles, boom, perfectly aligning where we actually get that massive upside. But let me mute that screen and get you up. There we go. Yeah, here we
Okay,
go.
so
This is the
I'm
money
actually
shot right here.
I'm in the middle of writing a report, so I'm actually like screenshotting pictures of the ISM right now and like trying to help people understand what's going on here. This is a very simplified version of what I have up on the screen. But every bull market we've had is when the ISM is going up. So after it bottoms, which it bottomed at the end of 2022, early 2023 for this cycle, which is when we started our bull market. It bottomed, I mean, with COVID in early 2020, and then we took off from there. It bottomed back in 2016 or end of 2015, which was the bull market we had there. And again, the time before that. And so every single bull market has come with the ISM taking off. Again, once we get past 50, that's when altcoin season comes. And that's when like everything just goes up. And then of course, when the ISM tops and comes down, that's when we go into bear markets, right? And even stocks do this as well. So there's no kind of change here. So this again is where we want to look at. The problem we've had, and this is outside of the global trade war we're currently having, is that the ISM, for the first time in decades, has struggled to pick up. You see here on the right side of the screen, generally every other time that we've bottomed, we kind of skyrocket up on all the other ones. And for some reason, the last 2 years, we're basically 2 years now since we've bottomed the ISM, it has not been able to sustain above 50. And that's what's holding back this, like the real bull market, the real, let's call it the altcoin season that everyone's waiting for. And that's not because of this global trade war. Of course, that's going to impact this even more. But really what's happening here is the ISM, the leading indicators for the ISM is financial conditions, right? Everyone has heard about global liquidity, financial conditions. We need loose financial conditions for assets to go up typically. What's really happening is when financial conditions loosen, more liquidity can enter the system, which means economic activity picks up, which means stocks do good, crypto does good, etc. We've been in this weird phase, this very unique phase for the last 2 years where the ISM hasn't been able to, or economic activity hasn't been able to like sustain above that 50 point. And the reason is financial conditions have stayed tight this entire time. The dollar has been in a range for the last like 2-3 years, like since 2022. Oil has stayed in a range for many years now as well. Rates have remained the same for years, at least in the US. And so financial conditions have not really loosened a lot. And yeah, maybe you got some charts there that you can show. And ultimately, that's holding back the ISM from going up. Now, again, this trade war is going to hold it back even further, right? There was a chance that we were about to go above it back when Trump won in December. Turns out a lot of that economic activity was actually people front running tariffs. And so we got faked out again, right? It looked like we were getting our altcoin season, the big bull market in December, January. It was a fake out. It was like economic activity increasing because people were front running tariffs. So now we're back below and we sit again and we wait. But the good news, I would say, is again, outside of the trade war, the dollar is down. I think you were explaining this as I was coming in. The dollar is down massively. Oil is down massively. Rates still remain and are very tricky right now, but it's likely as a result of everything going on here, rates will come down at some point. And so what we're seeing is a massive loosening in financial conditions. And thankfully, inflation, at least for now, is much lower. That might change due to tariffs. So again, we don't know there. But financial conditions are loosening. Liquidity is increasing as a result of this and probably increases a lot more, again, due to the war. That means the ISM finally should have a chance to go up. But again, we need either the Fed to intervene or we need this global trade war to not go away, but just come down a lot.
So here, let me ask your opinion on this. And again, I've been hosting a bunch of the discussions on the Mario Nawfal channel, talking about everything with the tariff, breaking news, the tariff, this, that. I mean, it's just nonstop of almost ping ponging back and forth, which feels like, and I could be completely wrong, it feels like there's a possibility for that exact reason that you just outlined with the ISM, that he doesn't want the market to crash per se, but he also doesn't want it to pump. So it's like, here's something that gives uncertainty, but then they give a little hope, the 90 days. But no, we didn't really do that. But 245%. It feels like they're trying to do everything they can until we get some clarity on when there's going to be action from the Fed. Are they trying just to put pressure on the Fed so they have good reasons and conditions to get that sort of, the starting to get rate cuts, starting to get some money roll off of the TGE, TGA? It just feels more like secret structured to keep the market where they want so that it doesn't run away so they can get those Fed conditions.
Yeah, look, I think the tariff war, I think that might have part of it. I think the number one reason is he wants to like reestablish America as a a manufacturing hub. Like, is America going to go and make iPhones and things like that? Like, probably not. But are they going to try and bring a lot more factories and manufacture more things? I think that's like the main goal. Plus, the other goal I would say is like recreate global trade with China having the lower end of the stick rather than being the dominant player right now. So I think that's one thing that they're trying to do. One of the impacts of that, one of the like secondary impacts of that, is it will slow down growth. And that was one thing they also needed because, as Besson has said a million times, and Trump, they want to get the dollar down and they want to get rates down. The problem is you couldn't get rates down. The Fed had no reason to lower rates because, one, inflation was still rising and unemployment hasn't been that bad. And so that is something they really, really need because, again, that's what gets the ISM up. That's what's going to make America look really good is if the economic conditions start to improve, right? They want to see a bunch of things happening in the US. And it was hard to do that because they couldn't get liquidity because inflation was too high. So I think there's sort of two-pronged approach they did. One, it's like America first. We got to try to beat China and restructure global trade. So that was one. I think they knew that the impact of that would be growth will get crushed. And as a result, inflation should come down and that'll allow them to bring rates down. And so they kind of were able to do two things all at once here. And so I do think part of the plan was not to get a recession or anything like that, but it was to slow down growth so that they can get the financial conditions they need to do a few things. One, they need to refinance a bunch of their debt that they got from the COVID days. And so there was that. And so there was a bunch of things that are kind of, it looks like might work out from this. We'll see. Obviously there's some weird stuff going on in the bond market. If this thing escalates even more and I don't know, they go into some sort of physical war, obviously this is going to be a big problem. Again, I'm more on the optimist. I don't think that happens. I think this will get figured out. But I do think there's kind of twofold reasons. One was set America up better in terms of trade. And then also to sort of almost reset the business cycle, reset inflation so they can get this ISM to pick back up and get economic conditions increased.
I completely agree with that. And I think it feels like there's different interest, there's shifting interest on the global stage for sure. But even in the
Yeah.
US, when you consider like the type of liquidity flows and what's going on with things like treasuries and bonds and stuff like that, which is also, there's other opportunities out there. What do you make? Have you looked into anything at all regarding the sort of Bitbond thesis and how that might be able to impact obviously massive money raise while also getting Bitcoin exposure for the US?
Yeah, look, I think the Bitbonds, I mean, I don't know if that'll actually play out and become a thing, but I think it's a great idea. What I like more than anything, though, is that you currently have, I don't know how many people around the US that are trying to find ways that the government can basically acquire more Bitcoin without using tax dollars. And so they're going to get creative, and there's going to be Bitbonds. You heard Bo Hines on a podcast earlier this week talk about taking some of the profits from tariffs and using that to buy Bitcoin, right? So they're getting creative on finding ways to buy Bitcoin. I think that's the most bullish thing we've heard of in crypto in a very, very, very long time. And so there's definitely a really good setup happening right now in Bitcoin. One, because of this, like governments are trying to figure out how can we acquire Bitcoin, right? Some are just going to buy it. There's some that are already mining it. Some are making a reserve like we had at the US. Some are going to do these Bitbonds or other things. And that's huge. We also have corporates buying Bitcoin, and they're continuing to do that. And if we look at where we're going right now in the world, likely the big thing that we're going to have to do is print some money, right? Whether it's the US or China's already doing it at other countries around the world. And what does Bitcoin love more than anything? It's an increase in global liquidity, right? And I'm pretty sure that that's what's going to have to happen out of all of this big growth scare. And so like, not only do you have governments and corps buying Bitcoin at large amounts, you also have liquidity starting to take off and likely going to take off even more as a result of all this. You can see, I mean, gold is at like 3,300 this morning, just crushing it. And generally Bitcoin lags gold in these kind of moments. So like there is a great, like incredible setup, I think, happening with Bitcoin right now. And then the other thing I would say is, and this goes along with the ISM, but every bull market that we've had in Bitcoin has been correlated with the dollar going down, right? Every time the Dixie breaks and goes low from like 100 and I think it's 4 down to 80s, that's when we have our bull markets. It happened in 2017, it happened in 2020, 2021, and whatever the one was before that, 2014 or something. And we're seeing it happen right now. Now it's happening for different reasons, but I think ultimately that's a very bullish sign for Bitcoin. So like it seems like an inflection point, in my opinion, for Bitcoin right now. Altcoins, I think, will be a bit delayed here. I'm not as excited for them today, mainly just because of uncertainty. But man, Bitcoin looks really good right now.
Yeah, I mean, I couldn't be more bullish on where the market's going. I think
Yeah,
what's been frustrating to a lot of people, especially newer people that have come in, things did happen relatively quickly looking back, but also Captain Hindsight, you don't remember how the endeavored days were. Even looking back at the cycle back in 2020 when we had that massive, uh, you know, basically massive sell off in the market following COVID. I'm trying to pull this
yeah,
back up. One second. This basically the setup right here where we had this massive sell off. This felt like, looking at this so quick back up. Oh my God, so quick. Such a quick recovery and then it's to the moon. Well, for those people, I mean, you had to be pretty ballsy back in here. This was the best trade of I mean, probably in crypto's history was this dip being able to buy anywhere in here. But then it's not like it just launched. This had, I mean, these moves were fierce to those people that were in them. I mean, a move up from here, that was a 53% move up and then followed by about a 20% drop and then back up. But even across here, all the way until we started actually breaking out, that's 174 days of, oh, it's easy. This was not easy. This was
so,
not easy for those that were involved. And then we get back to where we're at on this cycle now. People have already forgotten these 7 months of sideways price action that we saw back here in, basically March, the high in March 2024, all the way to the breakout here at the end of September. But you know what I mean? Here we go. Why isn't it happening? This is still a little under half what we saw in this cycle. I think we just need to realize it's not as quick as everybody assumes it is. And it does take some work, especially now that the big players are here. It does give better risk confidence to the future, but it also means there's a bit more anchors on the market that takes a little bit more work to actually, shake those chains off to get that momentum to the upside. And who's to say that they're not holding it a little bit? I have a friend of mine from Investing Bros regularly says, when retail misses a boat, you miss the boat. When institutions miss the boat, they bring that muff. They say, come back here, bring that boat back. We're getting on
Yeah.
with all our friends, and that's the key. And we got on-chain data. We have patience. We have a lot of things we can follow now to make sure we're swimming with the right people rather than just with our emotions, right?
Yeah, I mean, look, the best opportunities to make money in this space is when you have these overblown pullbacks, like we're in my opinion, we were in last week. We've obviously recovered quite a bit from it, but those moments, like you mentioned in COVID, that's where I made most of my money. Right, was just buying with haste during that moment. Right, but the thing that people need to understand is there are some pullbacks you buy, there are some pullbacks that you do not buy. And the main way that I differentiate them, and I have this up on the screen here, this is just the last 2 years, so it doesn't really show everything, but if financial conditions are loosening and we have pullbacks, those are moments where you buy and you go all in, especially if it's a big pullback like we had in 2020 or we have currently right now. If financial conditions are tightening, that is a time when you want to not be buying pullbacks. You want to be selling pumps, right? That is your 2022, right? Financial conditions were tightening. We were raising rates. We weren't printing any money. We were moving into QT. You don't want to be buying those pullbacks because those pullbacks will just keep pulling back. And as we saw, it happened for about 12 months. Bitcoin went from 70K down to 16K over that year. The same thing in 2018. We had financial conditions tightening, and that's when we had our year-long bear market. Today is different. This pullback, although I know a lot of people are calling for a bear market, and look, if a war happens, sure, we will get a bear market, absolutely. Or if tariffs remain at 250%, probably we remain in some sort of bear market. But today, financial conditions are loosening massively. And so this is a very similar moment, in my opinion, to what happened in COVID. And that is financial conditions were loosening, yet we had this huge overblown scare in markets where Bitcoin pulled back like 50%. And I don't know, it was like a day or 2 days. It was insane. And again, scary moment, very difficult to be buying during that time. But if you did, it was an incredible opportunity. And so again, I just think today, what we have up on the screen here is looking at financial conditions globally compared to Bitcoin. Whenever financial conditions tighten, Bitcoin does worse. Whenever financial conditions loosen, Bitcoin does well. And right now, we just had one of the biggest financial conditions loosenings we've seen in a long time. And so I think Bitcoin, whenever this like trade war resolves or we get some certainty around it, I think Bitcoin's going to have a massive moment. I don't see us going into this long bear market because of financial conditions. Again, unless something happens that like we escalate even further. But again, I don't think that's going to happen.
Yeah, I agree with you on that. I think the biggest question everybody has, and I think we think too far ahead and get a little too worried sometimes because we have to let the market. This is a nascent asset class that's only now entered the world stage. We kind of ended Epoch 1 on January 11th last year when we had the ETF go live. That's when institutions got the green light from Larry Fink and Fidelity, and then also started having a presidential candidate talking about a strategic Bitcoin reserve. We're now in Epoch 2. Now we're at the early adopter stage of institutions getting in, and then everybody wonders, looking at this chart right here, the halving cycle. It's going to be the halving cycle. Or the other argument is, no, the halving cycles, it's not going to be relevant anymore because now institutions are in. We're just going to have a more endeavored, trip to the upside, looking a little bit more like, for instance, if you look at the S&P 500 and Bitcoin, this will take a second to load because internet is never fiber optic when you order it, right? You should only pay for the actual speed you get from the internet, right? Not the
Right.
maxed amount. But seeing these, a little bit, I don't want to say smooth, but it's just been interesting because we've had the most bizarre flippening this cycle that I was not ready for, and that is having a higher volatility in the S&P 500 than Bitcoin. I mean, the argument about Bitcoin's volatile is now literally officially dead. It cannot be an argument because you're seeing it, with the drops we've seen, especially following DeepSeek with Nvidia and the Mag 7. Now, will they a little overheated? Sure. Maybe overvalued? Sure. But the point is, it's not just Bitcoin's a volatile asset class anymore, especially when the institutions and major players and world governments globally are now seeing, oh, wait, there's an asset that has a fixed supply, and we're all racing to figure out how we can get our legislators and our governing bodies in order so that we can get as much of this as possible. And I think that domino is going to happen very quickly. My question is to you, do you think we have a possibility, whether it be this cycle or next, to where we actually do get something in terms of like a bit of a super cycle, a bit of a larger move to the upside than we've seen in previous cycles? And the other question is, are we going to have a similar coming, basically going into October and November, December, having, about a year, sort of frustrating bear market, or are those days kind of behind us?
So first, I don't subscribe to the halving cycle. I don't think that's what drives the price of Bitcoin. I do think it matters. Like obviously, there's a little bit of a supply shock there, but even those charts, they don't line up to like the bottom of Bitcoin or like the top. Like they don't line up to anything. They're just like this random like 6 months into a site. Like they don't really make sense. What I think is happening here is Bitcoin moves because of liquidity in the ISM, right? But mainly liquidity. And liquidity obviously moves around the ISM, et cetera, blah, blah, blah. We already kind of talked about that. But liquidity has been basically controlled by the Fed and other central banks around the world. And basically been lined up around countries around the world since the global financial crisis, which is the same time that Bitcoin was created. Bitcoin was created because of that. And so central banks all came together in that time. And what did they do to get out of the financial crisis? They printed money, right? And they've been doing this ever since. And they do this in sort of 4.5 year cycles where they have to refinance their debt and they keep getting more and more debt because they have to pay off their interest. There's a lot of charts that you can see this on. And I think that is what's moving the price of Bitcoin. Now, it just so happens that Bitcoin was created at the same time. And so the halving occurs on 4 year cycles as well, right?
So that's one of the arguments I've made or suggested that is it the halving cycle or was the halving cycle instituted by Satoshi Nakamoto, whoever he, she, or they were, looking at the U.S. election cycle, the global liquidity cycle, the business cycle? It seems like it was like this just perfect, hey, we'll just do it on this and it will ride that trend. Also,
right. So,
just amplifying it by, especially early on, reducing by half new supply. That, I mean, it's really remarkable.
yeah, absolutely. So whatever reason is that it happens to line up, regardless, I think what matters is the global liquidity cycle, not the Bitcoin halving cycle. And so to answer your question, I think what we see next, again, this is dependent on what happens with the tariffs and the trade war, but assuming those go away, I think, yeah, we go into another bull market as seen by financial conditions loosening, liquidity picking up, ISM hopefully picks up as a result. That it usually does. It kind of lags the liquidity. But what I really think is actually happening here is we are getting a delayed cycle. And so what I'm kind of thinking is that Trump and their team, they want to see markets pump during midterms. Midterms is next July, right? So they don't want to see us top in October and then go into a bear market. They want to see us top in June or July of next year or sometime around then so they can say, hey, we've got the best stock market, Bitcoin's up, blah, 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 blah. And so if you look at what they're doing and you see that ISM, as I pointed out, has kind of just been chopping for 2 years instead of, as it usually does, goes up, this is kind of working into their favor. And so putting this trade war in now, getting this part over with, bringing rates down, slowing down inflation, slowing down growth is only setting them up for lower rates and better financial conditions at the end of this year / moving into next year. And so
talk about a coiled spring. I mean, it's just, right? It literally is like
going into this cycle, I figured October-ish, we'd probably have a similar cycle. Now, because of what's happened, we've had this big delay. You talked about it. We had that 8-month pullback last year. We're having, whatever we're in now, a few months and probably a little bit longer. And so it looks like they're actually pushing this bull cycle into later on, end of this year, into early next year. And so I think we're actually going to have a longer cycle. Now, will we have a 12-month bear market and will Bitcoin go down? I forget what it was, 60, 70% like it did then? Probably not. Again, because of ETFs, I think we're going to have more passive flows coming in. And so we'll still have even the NASDAQ had a 12-month bear market last cycle in 2022, but it only went down, I think maybe max 30%. And so will Bitcoin do something more similar to that? That's kind of my base case. And again, I don't know how long it's going to be. It just depends on what they do with the liquidity cycle.
Well, I got to say, you're one of my, I'm going to be having you back on as regularly as possible. I've loved this conversation. It's great when you have somebody that's got the data and also just moves the conversation along. I'm looking forward to having more conversations with you. I do want to highlight for everybody out there, pull this up real quick. You can make sure Kyle's got the Milk Road. You can follow at Milk Road Daily. Make sure you're giving them a follow, and also make sure you're following Kyle right here at Kyle Reidhead, which is Reidhead. We also have a link down below the video right here. Where is it at? This more info on Milk Road right here. I think they've got a pretty great newsletter. I'd love for you to talk a little bit about that and anything you got coming up, and we can talk about. I'll reach out to you offline so we can get some other dates set up for you here.
Yeah, absolutely. Love to join again. This was it was a great time. Yeah, Milk Road is basically a newsletter. We also have a podcast called the Milk Road Show, which is aimed at helping everyday people become better investors. We think crypto is one of the best opportunities that exists in markets right now, and we want to help people to capitalize on it. And I think the problem is a lot of people get a lot of really shitty advice, and our goal is just to help bring kind of like institutional style like research, but explain it in a very simple way for people. Kind of dumb it down for the average person, so that the good information is not just going to the finance, the trad bros, it's going to everybody. And that's what we do in our newsletter. That's what we do in our podcast. So feel free to check that out and join in. It's daily, so there's just nonstop info coming at you.
Well, I appreciate you, Kyle. And again, it's been an absolutely, I mean, I've loved the conversation the whole way through. So I'll reach out to you offline. We'll see if we can get some more dates back and forth on each other's stuff. And I'll have to have you on some of the spaces we do online as well. I love it when somebody's got thoughts about something and data to back it up versus people just opinion battling out there, which we need more people like you. So I appreciate you, Kyle.
Thanks so much. I appreciate it. It was a blast. Love the show.
Well, and sorry about Monday. I thought you had the link. I was like, oh man, where's he at? I was calling it out on the stream. Then afterwards, you emailed me. I was like, oh, here's the link, my guy. So big love to you, man. We'll get you sorted again, and we'll talk, man. I appreciate you very much.
Yeah, thanks. Take care. See you later, everybody.
Awesome, brother. Now, everybody, what a great conversation with Kyle. Make sure you're following him. We're going to be wrapping up here, heading over to, we did not meet the threshold yesterday to do a giveaway. And that giveaway was if we had 40 of the retweets on the basically the live stream that we had going on YouTube. I think it was only like 39. I think it literally was at 39. Let me see. Yeah, it's at, no, 29. Didn't even hit 40. I'm showing you right here. So if you guys want to have a giveaway tomorrow, you can retweet today's space, which is on my wall right here and on at Academy BitLab. Hit that retweet, hit that like button, show some love. We have 502 people watching on X. 5% of you could do this, and we would be most of the way there. Just hit that retweet, share it out. It's a great way to give some engagement back for this free content we're putting out for you daily here. Big love to each and every one of you. We're going to head over to Blockchain Basement now. That's all we got today. Adios, muchachos. We didn't get any super chats, so I just don't want to miss any of those. Yeah, we're all good. So I love you guys. I appreciate you. Again, shout out to the Milk Road team and Kyle Reidhead for coming on. Thank you again. Adios. I'll see you next time.